Hi, everybody. I'm Brittany Lewis, a breaking news reporter here at Forbes. Joining me now is Federal Housing Administration Commissioner Julia Gordon. Commissioner, I appreciate you coming on today.
Thank you so much for having me.
You were sworn in as Federal Housing Commissioner almost a year ago, but before we dive into your experience, I do want to take a step back into the past. Let's talk about your background. Senator Sherrod Brown described you as someone who has devoted their life to housing. Can you talk about that?
I have devoted my life to, or my career at least, to working on issues that relate to people and communities that we have not invested in properly in this country. And one of the areas where I think we fall the most short is in the areas of making sure that everybody has safe, decent, and affordable housing. And that's an issue that I began to work on while I was in law school, where I did work as a landlord-tenant attorney on the tenant side, representing tenants for a legal aid program, and have continued some of that focus throughout my career in different ways.
I do want to talk about how you are currently making safe, decent, and affordable housing a reality now, because that seems like it really should be a right. But before we get there, I do want to talk about your work on the DoddFrank Act. How did that type of work prepare you for your role today?
I went to work for a policy organization called the Center for Responsible Lending just before the financial crisis started. And as you know, the financial crisis was triggered by the failure of millions of mortgages that had been improperly underwritten and had been designed to fail. And so in the case of that particular recession, that was not a recession where, as in many recessions, housing can help lead us out of a recession, but it was one where housing led us into the recession. And I worked on this issue as a federal policy advocate, trying to prevent the predatory lending that resulted in the need for Dodd-Frank and that resulted in the financial crisis. So many of the issues that came up in Dodd-Frank were ones that my organization and myself had been working on for many years already.
Because of Dodd-Frank, will housing ever lead us into a recession again?
The mortgage market is much, much safer than it used to be before Dodd-Frank. Dodd-Frank enshrined a basic idea that should have been already something you would expect mortgage lenders to do, which is before you make a mortgage, make sure that you do everything you can to ensure that the borrower can pay it back. And don't create products that are designed to fail. And because I think Dodd-Frank did a very good job at that, the mortgage market is so much safer now. I can't say that in the infinite creativity of humans and of the financial services market, that there would be another way to undermine the healthy mortgage market in a way that could have economic consequences. But certainly I wouldn't expect to see a repeat of exactly what happened the last time.
Well, that sounds promising. And right now, this is the first time that the Housing and Urban Development Secretary, the Director of the Federal Housing Finance Agency, the President of Ginnie Mae, and the FHA Commissioner are all women. What do you think the significance of that is?
First of all, it shows that women have made tremendous strides in this business. When I first began working in mortgage, I was often the only woman in the room. And I know that that was the same experience for some of my colleagues. And so the mortgage industry has done a lot to diversify, both in terms of gender and in terms of race. I would say I've seen much more progress made at the mortgage lender level than in some other third-party provider parts of the industry. For example, I think we still have work to do to diversify the appraisal industry, but the last couple of decades have been a really successful time of diversifying in mortgage.
What's it like personally going from somewhere where you're the only female in the room to now going and the people that hold similar top spots to you are women? What is that experience like?
Well, I'd be lying if I said it wasn't fantastic at some level. It's very enjoyable to work with some people who I've known for a long time and became close with, in part because we were often in the minority in any particular room. So I think it's beneficial both to the market and to all of the stakeholders in housing that many of us who hold these positions now have a long history of working together and have long-standing personal relationships that help us do a better job of collaboration.
And today you've been on the job since May, so tell us about it. What have your priorities been? You said that a theme throughout your career is helping to make safe, decent, and affordable housing a priority for everyone. How are you exactly doing that?
I came into this job with two big priorities. One was to help create more access to affordable home ownership and affordable rental. And the other was to help prevent foreclosures or evictions that didn't need to happen. And I feel like HUD and FHA have made great progress on both of these fronts, both before I arrived and since I've been fortunate enough to be part of the team. And I think particularly on the avoiding foreclosure side, FHA has done a tremendous job of navigating through the pandemic, which was really the most swift and deep crisis that we've been through of that nature. And through the work that FHA did along, collaborating with the other parts of the mortgage market, collaborating with FHFA and the GSEs, and collaborating with the other government agencies, VA and USDA, that offer mortgage insurance programs. Navigating through that together, we were able to provide relief to all of those homeowners out there who were so scared at the beginning of the pandemic that they wouldn't be able to pay their mortgage. And we were able to say, hey, of all the things you need to worry about right now, your mortgage shouldn't be one of them. You can take a pause on paying your mortgage. And when you're ready to start paying, we will have solutions for how you can do that without increasing your monthly payment. And so far, that system seems to have worked very well. We had many millions of people across the whole system take these so-called COVID forbearances, and the vast majority of those people are now back to performing in their mortgage.
When you think about the American dream, obviously a house comes front and center in mind. You know, the white picket fence, an opportunity that anyone can achieve if you have enough hard work in there. But you've said before that homeownership is becoming just a privilege for the wealthy and that the middle class is disappearing. What are you doing to make the dream of homeownership a reality for the average American?
That's what's so important about the FHA mortgage program. What we offer is an opportunity for people who don't have access to a large down payment, and that's often because they didn't come from a family that had wealth, not just because of their incomes per se. We make it possible for people to get into homeownership with a much smaller down payment. Folks who come into our program don't have to have perfect credit scores. And most recently, as you may have read, we were able to reduce the price of FHA mortgage insurance, recognizing how expensive everything has gotten right now because of increases in home values and higher interest rates and the fact that people have had to pay more for some other things in their lives as well.
I do want to talk about that. That's saving borrowers an average of $800 per year. So, how specifically was FHA able to make that happen?
FHA has been very well managed for the past number of years and had developed a fairly comfortable financial cushion that is an indicator of the financial health of the program. And when we took a look at what we were charging for the insurance and our strong financial position, we felt like we could reduce the price of that insurance without putting the program in any kind of risk overall. And so that's what we did. I make it sound easy. It wasn't easy. There were a lot of different people who had to work on this, not just within HUD, but outside of HUD. And, so many people spent hours on pursuing the goal of doing everything we could to make housing and homeownership specifically more attainable for people who have been previously left out.
Are these cuts permanent or were they just temporary because to combat inflation, high prices, things like that?
These cuts are permanent. And what they do is they complement some of the other policy changes we've made to help make homeownership and access to credit more equitable. That includes things like changing the way we evaluated student debt, so that's more fair, and also enabling somebody's positive rental history to be a favorable factor in the underwriting for their mortgage.
I do now want to talk about some of the challenges that face the housing market, the housing industry right now. What's top of mind to you?
Right now, we're facing possibly our biggest inventory shortage ever, particularly for homes that are more affordable. And it's very important to increase that inventory. Among other things, just given the laws of supply and demand, having more inventory will help prevent homes from getting even more expensive than they already are. And so that's something that HUD has worked on a lot, to be honest, both on the homeownership side and on the rental side. In all of these areas, we know that people have to pay too much and that putting more supply of homes out there is a really big part of the solution.
Low housing inventory has been an obstacle since the 2008 crash and has never fully recovered since. So, how specifically is HUD, is FHA combating this?
Well, we don't have any significant tools to cause new homes to be built on the homeownership front. There are a few things that we're doing that are within our control. For example, we can make sure that when a borrower does experience a foreclosure, we can try to make sure that that home is sold to a new owner occupant rather than just turning into a rental. And one of the things we've accomplished in the past couple of years is right now all of the different ways that these foreclosed homes might be sold, they all have a first look requirement in them, which is an exclusive listing period for owner occupants or for nonprofits who work with owner occupants to acquire that property. So that's an example of something that is within our control. Probably the most important other thing that FHA can do is we can help maintain the ability of more people to be able to purchase homes that become available. Because the fact is, home builders aren't incentivized to build more homes unless they know that the capacity is there for people to buy those homes. And so that's really our bread and butter there.
And how are you incentivizing these home builders?
Well, what we're doing is we're incentivizing them by creating the ability for people to afford to buy a home. by doing the things we talked about before, by reducing the price of the mortgage insurance premium, by having a low down payment product that doesn't require a household to put down 20% down, by changing how we underwrite people so that they're getting credit properly for other things that they've done that show that they're a good bet to be a homeowner.
I do now want to pivot to another challenge. According to real estate brokerage Redfin, the total value of U.S. homes has fallen from a record high of $47.7 trillion in June to about $45.3 trillion at the end of 2022. This was the largest June to December plummet since the mortgage crisis of 2008. And this, paired with the housing inventory problem, are we heading toward another housing crash?
To be honest, I really don't think so. Just in the past couple of months, we've started to see a little bit of a leveling out of any declines. And again, the shortage of housing is something that supports housing prices, not the other way around. Because anytime people are competing for a scarce commodity, that will keep keep the price more elevated. So while I think it's important for home price appreciation to remain in a more moderate level so that we don't push home ownership further and further away from the capacity of the middle class, I think it's really important to do that in a very balanced way by supporting new supply, by supporting access to credit, and by making sure that the fundamentals of the market are sound. I think they are right now. Housing has suffered disproportionately to other sectors from the very swift and steep interest rate rises, the actions that the Federal Reserve took to combat inflation that really did fall heavily on the housing sector. And so I'm hopeful that as we've already started to see the rate of inflation slow, and hopefully that means that we can get back into that more balanced market going forward.
Commissioner, you came into the position on the heels of the brunt of the pandemic. But what's next? When you're looking at the next year ahead, what's on the top of your agenda?
I continue to spend a lot of time thinking about the 350,000 borrowers we have who still aren't current on their loans. The interest rate environment significantly impacted, in some cases, our ability to provide those borrowers with help in reperforming on their mortgages because of it's kind of a technical issue, the way our program works. But basically, if you come to your servicer for help, there are kind of a suite of options. Some people call it a waterfall of options that mortgage servicers can go through to help people. And one of those options is something called a loan modification. And what a loan modification does is it can adjust both the interest rate of a mortgage and the length of that mortgage term in order to give people some payment relief on their monthly mortgage payment. The rise in interest rates made it more difficult for servicers to provide that kind of relief to people because they really couldn't reduce that mortgage rate. So what FHA is doing now, and what I consider one of our biggest priorities in the near term, is trying to create some new tools that will enable us to help people in the same way, even when we're in a different interest rate environment, if that makes sense.
It does. And Commissioner Julia Gordon, thank you so much for joining me.
Thank you again for having me. It was a pleasure.